Welcome back to the Dividend Diplomats YouTube channel. You got Bert and Landy, the Dividend Diplomats. Today we're going to talk to you about 3 stocks to watch entering the month of June.
But before we do, smash that subscribe button, give Bert the Hurt and Landy a thumbs up. We're cruising on the way to 10K and we cannot wait to get there. It's been a hell of a ride and we can't wait to hit that threshold.
Yeah, so as you all know by now, you've watched our channel for over a year now. We are always on the hunt for undervalued dividend growth stocks. We aren't just sitting on the sidelines letting our cash earn nothing. We are trying to put that money to work in the market, grow our passive income so we can achieve financial freedom.
That's what it's all about. You know, you have to watch all our videos and hear us talk about why dividend investing could be the absolute best form and easiest form of passive income to not only start right now, but to have when you're in, that financial freedom, financial independence mode. Exactly,
Lanny. So what we like to do is every week or so, we like to put out some undervalued stocks that we're keeping an eye on. And then we record it and share it with all of you because we like to share what we find and what we're watching and even buying with all of you so you can help grow your passive income too.
We love what we do here. I mean, we are so passionate about dividend investing. And if we can help anybody out there, 1 person, 2 people, 10 people, find an undervalued dividend stock to buy, we are going to do just that. And you guys know full well, we are fully transparent. Whether it's here on the YouTube channel, whether it's on our blog, whether it's on our Twitter account, you absolutely have a complete idea of what we're doing and what's in our portfolios.
Exactly, Lanny. So now let's talk about how we find these undervalued dividend stocks using the 3 metrics of the Dividend Diplomats Dividend Stock Screener. We have the PE ratio less than the S&P 500.
Dividend payout ratio between 40 and 60%, that perfect sweet spot. Just we prefer under at least 60%.
Exactly, Lanny. And then we have the history of increasing dividends where we always look at the 5-year average dividend growth rate and how many consecutive years a company has been increasing its dividend.
And then lastly, we'll always add in just to see what the dividend yield looks like. Because again, if they meet all these metrics, be it the dividend growth rate is low, we would expect a higher yield. And essentially, if it's also a higher growth rate, we like to look at just to see if it's at least a reasonable yield to go along with it.
Exactly, Lanny. And we are recording this video over Memorial Day weekend, so all the prices in this video are going to be as of the close on Friday, May 28th. I almost forgot the date there for a second. But yeah, so that's why we're excited. We're going to talk to you about 3 undervalued dividend stocks that actually, we own all 3 of these companies.
3 dividend stocks to buy right now. Bert put this list together and I'm like, yeah, I can't argue that. They all have perfect Dividend Diplomats Stock Screener metrics. They all have growth rates that are 10 years plus, all have the perfect dividend payout ratio and price to earnings ratios below 12 times earnings. This is the list right now.
So let's get excited. That first company is Verizon, ticker symbol VZ.
Big red.
What jumped out to me about Verizon was actually after we recorded one of our videos from last week where we talked about AT&T after the merger, compared it to Verizon and looked at and asked which company is the better telecommunications company to buy. I left that video saying both companies are great, but sleeping on it, looking at the next day, I'm like, man, these Verizon metrics are fantastic. So let's start talking through them. Their stock price was $56.49. Forward earnings were $5.08. That gives you a PE ratio of just over 11.
That's right. And then they pay a current annual dividend on, obviously broken out by quarters, but $2.51. So that dividend payout ratio is in that perfect sweet spot at just under 50% at 49%.
You are not kidding. That is a perfect dividend payout ratio.
The sweet spot.
We don't joke around when it comes to dividend growth investing.
Part of the bet, it's the good spot right now to be in for Verizon.
Yeah, they've increased that dividend for 16 consecutive years with a 5-year average dividend growth rate of 2.15%. Notably, though, that is 2.15% higher than their rival AT&T.
All right, so that is Verizon. Again, their yield is right now 4.44%. They're going to be the leader in 5G. They're laying out the fiber right now, optic as well for internet for businesses. Verizon staying true to what they know best, and that is communications.
Yeah, and that was one of the funny takeaways from that video is a lot of you commenters were talking about dove into the management of the two company, and we know what AT&T's management has done and how it's turned over. But everyone seemed to talk about how Verizon's management is consistent. They know what they're good at. They're sticking to their focus.
The color stayed red.
Yeah, they have not changed that yet. So, I mean, it's good to see. Great company, great metrics, strong dividend with that 4.4% yield.
Expensive phone plan.
Expensive phone plan. That is why I switched to AT&T. But that's neither here or there. Company number 2 on this list is Pfizer, ticker symbol PFE.
The GOAT and the COVID vaccine. Let's go.
Yeah, we both got that Pfizer vaccine.
We did.
Yeah, I mean, this company, we've talked about this company a lot over the last year, but the metrics always are great when we're talking about them. We've never tried to pitch an overvalued Pfizer to you. Every time we've discussed it and brought it up, it's been an undervalued dividend stock.
Tell you what, you're not reaching for yield here. You're not reaching for risk. Pfizer, they had the spin off. They created a new entity as well with Mylan and the Upjohn business. And everybody was under the impression that the dividend was going to go down because of it. But Pfizer said, hey, not because of COVID, but possibly because of COVID. They're keeping their dividend actually the same, which ends up being at least in my eyes a 10% dividend increase this year with Pfizer because of them maintaining that dividend. Their forward earnings projection is $3.80 from the analyst right now, so that price to earnings ratio is only 10.19.
Fantastic. And with that maintained dividend, with that secret dividend increase that they had by not decreasing it after the merger, their annual dividend is $1.56. Divide that by the 380, that gives you another perfect payout ratio of 41%.
Incredible. And they've been increasing now for well over 10 years, soon to be essentially, you can call this the 11th year. Their 5-year dividend growth rate is pretty much at 6% plus right now. Fairly consistent with Pfizer, and I can't wait to see what they can continue to do going forward.
Exactly, and their dividend yield is over 4%. So as Lanny said, you're not reaching for yield, but that is a very strong yield, more than 2 times the current S&P 500.
That's a hell of a deal.
It is, so hopefully you can see why Pfizer continues to remain on our watch list here, because the metrics look great.
Hey, because the deals are so good.
And dividend stock number 3 is another company that we just uncovered and talked about in our video last week. So thanks to some of the people that helped point this company out to us.
That's right. Kevin Nash.
Yeah.
Big Diesel.
Yeah.
No?
No.
NWO? The Wolfpack? We do what?
Not Kevin Nash, SpartanNash, ticker symbol SPTN. Strongly encourage you watch the video that we had recently talking in detail about this company. But what we like is they are in the grocery sector. They help out the military. They are in grocery stores and they have wholesale distribution. So 3 major revenue streams for this company to help their income, cash flow, and dividend continue to grow going forward.
That's right. I mean, currently trading at just under $21 per share with the forward earnings projection of $1.76. They've got another great price to earnings ratio below 12 at 11.91.
And they also have another great dividend payout ratio, because with their annual dividend of 80 cents, divide that by the earnings, that gives you a perfect payout ratio of 45%.
We might have to change NWO to DWO, Dividend World Order.
Oh boy.
Hey, you heard it here first.
We got to end this video soon before they just keep rolling in at this rate. So they've increased that dividend for 10 consecutive years. They have a 7.03, so 7% essentially 5-year average dividend growth rate. Fantastic.
Great growth rate because it goes along with that dividend yield of 3.81%. Great combo, almost 11% factor right there. Obviously the last increase was just under 4%, so not quite that 5-year average. But again, coming out of a pandemic, as well as paying down that debt level, I can see that, 4% though is solid.
Yeah, exactly, Lanny. So everyone, just to quickly summarize here, the 3 companies, Verizon, Pfizer, SpartanNash. I'll put the metrics up. I'm not going to reread and go through each one of them again.
What's your favorite out of the 3?
Right now, I'm leaning Pfizer and Spartan with Verizon in third. What about you? Why? I mean, look at the metrics. I think we pretty much highlighted that all of them are pretty strong there, but Verizon has the lowest PE ratio and, a great yield combination, but so does Spartan. The one funny thing with Spartan was after we did the video last week, their price jumped up, what was it, 5%?
Yeah, jumped up about almost $1 per share, almost 5% in the last 5 business days.
Yeah, so that's why Pfizer's number 1 for me. And what about you, Lanny?
Looking at these 3, I have a big position with AT&T, and I already have over 60-something shares of Verizon. I'd buy Verizon probably. I like them under 56 if I could. SpartanNash, still great. I mean, 3.8%, 7% combo factor. I bought a few shares for my wife last week. I would love to keep adding more, possibly at this under $21 mark. And I already have a pretty large position with Pfizer. So I'd go Spartan, Verizon, Pfizer.
There it is. Let us know your order of the three, and let us know what other dividend stocks are on your radar this week. We love it. Thank you all for helping us find Spartan. It also popped up on Lanny's screener too outside of it, but just the more dividend stocks that we can share with everybody in the community, the better. We will never complain about you asking us to look up a stock and let us know what our thoughts are.
Let us know your thoughts on the three. Let us know your order, which one you like, if there's just one out of the three. Don't forget to smash that thumbs up button here. Subscribe to our channel here at the Dividend Diplomats. That was Bert, and this is Lanny from the Dividend Diplomats.
Over and out.